We saw incredible strength last week, and not many were positioned for that sort of strength. Has the fate of the greenback changed? And how do the uncertainty over the debt ceiling negotiations factor in?
Well, undoubtedly, the debt ceiling negotiations are really dominating market thinking in the current environment. And I think that just sort of adds to the sort of broad range of uncertainties which centre around the Fed. And as you've just highlighted, that you have a couple of key Fed speakers coming through the course of not only today's session, but we get a number of Fed speakers through the course of this week. And that is another additional risk variable for the market to consider. And then you overlay that with the issues in relation to the banking sector. And there's good reason for investors to remain relatively defensive. Now, in the shorter term, that's provided a little bit of relief for the dollar, but I think there is still some question mark about that dollar trajectory. So I think it is very much the case that dollar rallies are probably going to be relatively short-lived and most likely be sold into, particularly in terms against some of those safer haven currencies. So in a sense, that probably provides some resilience and ultimately interest to buy dips in currencies like the euro, for example.
And what about the Japanese yen when you're talking about safe haven currencies? Is it back as a haven trade now?
Well, I think the yen is a very interesting context because, of course, the BOJ is in a very different sphere currently still to global markets. But ultimately, it does feel as though Japanese investors are keeping a little bit more money of their money onshore. And I think that will play into that broader recovery narrative. So I think there is this bias from many investors and or analysts that the yen should be stronger, and we would certainly anticipate that as well. So we would expect, for a year-end target to be somewhere in the mid-120s. In the shorter term, though, if we are going to see this uncertainty in the dollar and we were to see the risks of that ex-date being tested and or potentially ridden over, then I think we may well find that spreads are providing a little more support, and we do see interest in terms of moving back towards safe havens, including the yen.
Jeremy, do you see much of an upside risk, a tailwind for the Aussie dollar if we do see more benefit from the Chinese rebound?
Well, I think there's certainly some value to be had in terms of the Aussie recovery narrative. I think there are and will be bumpy episodes ahead in terms of the Chinese recovery narrative. I think it's never going to be a linear recovery in terms of the rebound, and I think there are signs that obviously the Chinese consumer is still a little bit reticent to spend aggressively due to ongoing uncertainties. But I think the recovery narrative, which will probably be helped or amplified probably by further monetary policy support over time, I think will play positively into the Aussie backdrop. So we would expect the Aussie to remain reasonably well supported, albeit, of course, as a high beta currency, it does tend to underperform in periods of uncertainty. So I think from a strategic bias, we would be long the Aussie, but I think you have to be mindful that in the shorter term, it is, as a high beta currency, susceptible to risk uncertainties, and taking us back to, obviously, the debate about the ex-date.